And it's the 11th of January, 2023, right here in Lagos, Nigeria. Great to have you join us. Good morning, good evening. Wherever in the world you're watching from, is Business Morning live on Channels Television. I'm Ladi Williams. Let's kick off now with the markets. Let's start with the oil market. We see oil prices fell, erasing the previous session's gains after industry data showed an unexpected build in crude fuel inventories in the United States. That's the world's biggest oil user, which reignited worries about fuel demand. See, U.S. WTI crude futures fell 59 cents to $74.53 a barrel, while Brent crude futures were down 62 cents, about 0.8% to $79.48 a barrel. U.S. crude stocks jumped by 14.9 million barrels in the week ended January 6, according to sources citing from the American Petroleum Institute. At the same time, distillate stocks, which include heating oil, jet fuel, rose about 1.1 million barrels. We'll still see oil prices still below the $100 level in 2023. Let's move on to other markets. Now we see Chicago soybean lost more ground with a lack of demand for U.S. supplies weighing on the market, while wheat fell for a third consecutive session, hovering near one-year lows, mainly pressured by technical factors, and corn also slid. Wheat was down 1.7% at $7.29 a bushel, had fallen to $7.26 earlier, not far from the 13-month low of $7.23 hit every last month. In Europe, Paris-based Euronext fell to a fresh 10-month low of 291.25 euros a ton. The U.S. Department of Agriculture, USDA, on Monday reported weekly grain export inspections for corn, soybeans and wheat near the low end of range of trade estimates. U.S. exports have struggled to compete in the global market with cheaper South American supplies. And we'll take a break now. When we come now, we'll drill down on the Ethiopia Airline Nigeria Air deal. What's holding it back? That's our next conversation. Do stay with us. All right, now to our first conversation. As plans for Nigeria to enter the League of African National Carriers that include Ethiopia Airlines, Kenya Airways, Rwanda Air, and others, it seems to be facing a resistance with local carriers. Let's talk more now about this with Dr. Alexander Nwuba, President, Aircraft Owners and Pilots Association of Nigeria, joining us right here in the studio. Good morning.
Good morning. Thank you for having me. Happy New Year.
And great to have you.
My pleasure as well.
So it's obviously, it'll be nice, for Nigeria to join this league.
Certainly.
We have our own national carrier. That's the pride of, most nations. But this particular deal seems to have some kind of issue. First of all, I want you to break it down for us.
Okay.
What this whole deal entails.
Right. It is a proud thing that we have a national carrier. We return to the days when we had Nigerian Airways at major international airports. So you arrived in London, you were going through the airport, you see the Nigerian flag right up there with everything in South Africa and Dubai and everything else. That's what everybody wants, including the airline industry, including individuals like us in the industry. The challenge has been that there is a lack of information about the intent of government in terms of, yes, we want to get this done, but the information that flows out is not consistent with the vision Nigerians would like to have. For example, we don't want something called Nigerian Airways owned by Ethiopian Airlines. Where's the pride in that? And you started by saying it's a proud thing to have that. So the challenge has been for everyone that we're pushing forward this national airline called Nigeria Air, but the ownership structure doesn't quite work, and there are quite a few things. And so also if you look at it and say, okay, a government will support that, we already have a very established, very robust, very functioning domestic airline industry. Why can't that scale to become the pride that we have? I mean, every airplane carries a flag, and so we haven't addressed that issue. So everybody's asking the question, why are we approaching this thing in such an unclear manner? And that's the concern that's led to the issues we find ourselves in.
So it's supposed to be a 95% stake that Ethiopia Airlines supposed to have in this deal. or somewhere around
So
that.
the idea is this, is that it will be majorly owned by Nigerians. So majorly to government means 51%, where the federal government would own 5%, Nigerian investors will own 46%, that would give us 51, and then Ethiopian would own 49. But if you look at it from the way business is conducted, 49 is the largest shareholder. So essentially it will be an airline owned by Ethiopian Airlines because they're the largest shareholder, and so they'll shape the policies of that airline. In shaping that policy, are those policies consistent with what Nigerians expect? Ethiopian Airlines is a government airline, so would they be pursuing the best interest of Nigeria or the best interest of Ethiopia? Especially if we look at the evolving aviation landscape. Africa is looking towards a single air transport market, so basically you can fly from Akure to Johannesburg or from Ibadan to Egypt, somewhere, you know, and so that's a single air market. When you have that and we don't have control of our own industry and our own market, not only is it a pride issue, but we also lose many things, including our national security interest.
So would you say it's a funding issue?
Because it cannot be. Who is Ethiopia? Great people are not considered one of the richest countries in Africa. Neither are they considered one of the largest economies in Africa. Nigeria certainly is the largest economy in Africa despite its many challenges. Just imagine if we resolve our challenges, what kind of position we would have. So the reality is that it cannot be a funding issue because we've always found money to address our needs. And so we must find money to address this national security need and this economic need as well as this pride issue for us as Nigerians.
Right. So let's look at the incentives, you know, now that, you know, Ethiopia Airlines are supposed to be getting, you know, from the government. First of all, this 15-year moratorium from the Nigerian government. It's quite a big one. 15 years is a long time, but how do you see that?
Well, the truth is that we say that that's the case, but I don't actually think that's the case. Ethiopia has proposed a 15-year moratorium. It's not unusual to do that. When you come in as a foreign investor into any market, one of the things you want is tax relief, so that you can make money as long as possible, save a lot of money in taxes so you can actually grow and scale your business. So it's essentially a proposal from Ethiopian Airlines. It's not an unusual proposal. It's not an unfair proposal. It's not one that government necessarily has accepted, but it is not a bad proposal. The question is, it's not even the tax incentive that concerns me. It's the 46% ownership structure. There's no reason why Nigeria cannot support the capital markets, the financial markets, by raising money locally to kickstart this airline so that it is truly Nigeria Air. As it scales, it gets bigger, becomes more successful. We can all shout that we're very happy to do this, just as the UAE has done with Emirates, South Africa is doing with South Africa Airlines despite challenges, as well as Ethiopia itself is doing today. So
talking about, you know, national carriers now, take for instance South Africa, they've had their issues,
absolutely,
you know, with funding,
right.
And you know, looking at Nigeria Air, you know, let's say for instance we sort out all of these issues, you know, and we take off, you know, with Nigeria Air. How do we, you know, plan it to make sure we do not fall into those kind of issues that, you know, most other countries have with their national carrier?
Well, we cannot be under the illusion that having a national carrier means that it's self-sustaining. That's the challenge South Africa has had. It's the challenge Kenya is having as well. Ethiopia has been successful because the government has allowed the airline to operate as a private enterprise, which is along the same models government is envisioning by having only a 5% stake, except that they're taking the wrong direction with that. But we cannot be under the illusion that we will not have to put more money into it. We must sustain this industry. Ethiopia sustains the airline industry. The government, pours money into it, and they use the sovereign credit rating of the government to lower the cost of interest to finance the business. So whether it be Ethiopia, or even the UAE, you know, the Americans complain significantly that it was not very competitive doing business in the Middle East because UAE carriers were getting subsidies and support from the government, which the US carriers were not getting. So the reality is, we'll put money into it now, we'll put money into it in the future. But if we do it in such a robust way that we use capital markets that are interest-free loans or financial markets or government credits support, there are ways to achieve this with the minimum impact to Nigerians. But even if Ethiopia came into the business and the government only had 5%. Nigerian investors had 45%, and the Ethiopians had 46%. The reality still remains that when the airline runs into problem, they're going to stretch their hands out to the federal government and will still pay the bills. We're not going to say, no, it's not our problem.
So let's say, Ethiopia actually pulls out, Ethiopia Airline pulls out from this deal. What next?
It'd be a good thing for Nigeria. We'll have to address the issue. Look, there are two parts to it. One of them is to say, let's support the domestic airlines to scale. They're having many challenges, and these challenges are not market challenges, but policy challenges. The cost of doing business in Nigeria generally, the business environment in Nigeria, even fuel supply and all of those things. Those are the challenges the rail industry is facing. The creation of Nigeria Air owned by Ethiopian Airlines will not make those challenges disappear. We'll still have shortage of fuel. We'll still have high cost of navigation, all of these associated costs. So what we really need to do is go back and say, from a policy standpoint, what is the role of aviation in our industry? If you look at the UAE example, what they've said is, look, oil is in decline. We've got to find other economic sectors. One of them will be tourism, the other will be business. And so what will achieve that? We need an airline to achieve that, to bring people to Dubai, one, or to make them transit through Dubai to various parts of the world. And in that transit process, we'll deal with industry. So if we as a country sit down, and that's the problem with our leadership in terms of this industry, if we as an industry or the government sat down and said, what's the role of aviation in the Nigerian economy? Can it support? I happen to be sitting on a committee. One of the very innovative things that's come out of this government is the decision of the managing director of the Federal Airport Authority of Nigeria to say, look, why is Nigeria not the #1 leading agro-export economy in Africa? And so what are the challenges we'll face doing that? So he said, now we've identified the problem, how do we solve the problem? So he gets the best minds in the industry together and say, move us to #1 in the next 2 to 3 years. He's not going to be there in 2 or 3 years' time if the government does not return. If it returns, he'll be there. But he's not looking at that. He's simply saying, what will it take to move this country to move to #1 position? What are the policies we need to put in place? He invites the public sector, combines them with the resources of the public sector and says, let's take these actions. Government will support that initiative. It's the very same way the Ministry of Aviation has to look at the sector and say, what industry would it support? It will support the industrialization of Nigeria, will support the tourism sector, to support business growth. So now let's put the resources behind that. Giving that to a foreign country, majorly, is not going to achieve that, because the focus will always be on their own economy. And if you look at the markets Ethiopian is operating in, all those businesses, all those airlines channel traffic to Addis Ababa. And that's why Addis Ababa's Bola Airport is expanding year by year. So we've got to get our priorities right and set the right direction.
Set the right direction. All right, well, we'll keep tracking to see what we know they're in court right now. We'll be watching out for the outcome of that. All right, thank you so much, Dr. Alexander Nwuba, President, Aircraft Owners and Pilots Association of Nigeria. It was great having your perspective today.
My pleasure being here this morning. Thank you
so much. All right, so we'll take a break now. When we come back, we look at the agro industry, how to scale to get more IGR at the sub-national level. That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Now to our next conversation. 2022, global economy has experienced food inflation as a result of supply disruptions brought about by Russia's invasion of Ukraine. And back here in Nigeria, food inflation hit 24.13%. That was in November 2022. We're still waiting for the December numbers. That'll be out soon. But let's get a sense of how, food security can be achieved at a sub-national level. Join us now is State Commissioner for Agriculture, Ms. Abisola Olusoya. Join us right here in the studio. Good morning.
Good morning, Larry.
Happy New Year.
Same to you.
So I remember sometime late last year, you did have a projection for contribution of agriculture to IGR in Lagos State, and it was about 1 billion. At the time, and at the end, you were hoping to get about 1.2 billion.
Yes.
How did that work out?
I actually touched 1.2 billion. Yes, for 2022. 2021 obviously was 1 billion and let's say 100 million. But like I had said, it was the first time in the history of the Ministry of Agriculture, Lagos State, that we ever hit the billion mark. So for the number of years that Lagos State has been in existence, we have never touched the billion mark. The highest that had ever been done by the ministry ever was roughly about 300 million. So to have jumped from that number all the way to 1.1 billion and then 1.2 billion in this year, even with COVID and what have you, economically and the slump in the markets and what have you, I believe that the Ministry of Agriculture still did very well in upping the numbers.
So tell us how you achieved this.
So the truth of the matter is that when it comes to revenue generation, the administration of Mr. Babajide Olusola Sanwo-Olu is very akin to harnessing all of the resources at its disposal just to ensure that we don't have as many leakages as we had in the past. The Ministry of Agriculture and every value chain under it, it has the potential to actually generate billions and billions of revenue, because when you look at the entire value chain from the point of input supply all the way to aggregation, to logistics, to warehousing, to marketing, to the final consumption by the market, you realize that the amount of monies that could be made is huge. And what we have done as a ministry is just to go back and reassess, okay, what do we have at our disposal? What are the assets we have under us? And not just the assets alone, what is the quantum of the size of the market that we are dealing with, that we can be able to tap from it, just essentially telling those that we have concessioned assets to, and even those that we have partnered with in various areas, just to be able to pull the resources from them. So it was just a function of realigning our objectives with theirs, also looking over agreements that had been signed in the past and bringing it to the current realities, just to show that the market has expanded. The Lagos of the 1970s and 80s and 90s, which was on the premise of what some of these assets were leased out to, is completely different from the realities today. If you look at the population, Lagos is getting close to 30 million people now. If you look at the Jakonde area, how many people were in Lagos? So you cannot begin to utilize what was agreed upon 20 years ago and still be asking for such amounts of money today in terms of revenue generation. So we had to do a lot of renegotiation, looking at today's realities, and not just that, also trying to open up new possibilities. So if you look at the red meat value chain, for instance, there are a lot of initiatives that we have actually brought to the fore, trying to transform the red meat space with the feedlot program, trying to also bring about last mile meat stores, and not just that, even in terms of being able to assess those within the space, particularly those that are operating clinics illegally, just trying to clamp down on them, but not just clamping down on them, trying to reassess to see, okay, is there a possibility around how things can be done in a legal framework such that at least the Lagos State government can also generate revenues for it. Then I think more importantly, Lagos being the largest market in sub-Saharan Africa with over 24 million people, and looking at the amount of food that we consume on an annual basis, which is right now over 5 trillion naira, it goes to show that there's so much possibility around us. So we are even trying to reorganize our food systems in such a way and manner that what comes into Lagos, we can actually be able to capture the data, what is going out to the various markets, we understand how the movement is, and then be able to take the value from there, for the people of Lagos, for the utilization across the various MDs.
Let's look at food inflation for now. That's at 24.13%.
Yes.
How do we solve this at a subnational level? What's the plan?
Truth is, for food inflation and looking at Lagos, when it comes to the agri value chain, you have production, you have processing, and you have marketing. Those will be the three legs, so upstream, midstream, downstream. In terms of strength, Lagos is strong when it comes to midstream and downstream sector, which will be the value addition of the processing and the marketing. When it comes to production, yes, we have areas of competitive and comparative advantage. So you talk about fisheries, for instance, where we have strength in aquaculture. We have a lot of aquaculture farmers, and we're also pushing initiatives, particularly around the cage and pen culture. And then when you look at processing, you have the likes of the Immortal Rice Mill, which is about to be commissioned, and you have other micro-processing facilities and small, medium-scale enterprises that are actually into value addition. Like I said, the biggest factor and the biggest advantage we'll still have is that we are the consumers, we are the market. Yes, inflation will hit us the hardest because at the end of the day, you are taken from other spaces. But what Mr. Babajide Olusola Sanwo-Olu has also initiated, which is actually in play right now is the construction of the largest food park in Africa, sited on over 1.2 million square meters of land. Let me give you an example. If you go to Paris today, Paris has the largest wholesale hub in Europe. In that particular hub, which is just sited on 235 hectares of land, over 10 billion euros of food is transacted in that space, just 235 hectares, and this is the Rungis market. And in trying to use that as an exemplar to say Lagos can do the same, we have many markets. Food is coming from all over Nigeria and even other parts of West Africa into Lagos market. How are we able to capture this? The truth of the matter is inflation will continue to happen when you do not match supply and demand properly. All the foods are coming into Lagos. You don't know where they're coming from. People are selling at various prices, and you have so many middlemen. You can have up to 7, 8 middlemen between the producer and the consumer. Inflation will definitely hit. Yes, but when you have a particular location that can serve as an aggregation hub where all those foods are coming into, you can weigh what is coming in. You know who is bringing it in. You know who has ordered it. You know the standards that it has been produced with. You know the kind of tools and equipment that have been used to even preserve. And preservation is key because most of the time you experience about 40 to 50% post-harvest losses. When those losses are incurred, whosoever has produced or whosoever the middleman is still going to want to make his money, because in as much as half of that food is gone, he must still make his profits, which is why you buy less but for more money. Okay. But when you have an aggregation hub that has the facilities, that has the resources to be able to preserve food for a longer period of time, then it means you have less scarcity, even in periods where it is not yet the time for maybe harvesting or for that particular crop. And you'll be able to more or less keep the value in, and at the end of the day, the price point for that particular product is less. And that way, we are able to buy, and the average Lagosian is able to have more disposable income just by reason of this. Yes. All
right, so you did give the figure for 2022.
Yes.
1.2, you did hit billion. That. What
yes,
do you say for 2023 before
2023, the truth of the matter is, well, I'm estimating at least 3 billion.
3 billion
revenue, yes.
That's for 2023.
Yeah, for 2023, yes.
Fantastic. Thank you so much.
Thank you,
Mr. Bisola Olusoya, Commissioner, Minister of Agriculture, Lagos State. Was great having you.
Thank you very much.
All right, now, so still with agriculture, we head on now to the FX commodity statement. That's in a moment. To stay with us. And for the weekend at 9th January 2023, it's all green on the activity summary of the AFEX Commodity Exchange. Join me now is Omotola Akongbe, market data and research analyst at AFEX. Join us from our Abuja studio. Great to have you.
Hi, good morning.
Good morning, Omotola. So let's have the review of the week.
So like you said, it was actually a green week for our major indicators. We saw an increase of 22% in our turnover. It increased from 2.16 billion naira to close the week at 2.63 billion naira. We also saw an increase of about 41% in volumes of contract traded, increasing from 3.7 million contracts to 5.2 million contracts. We also saw an increase of about 13% number of deals traded, increasing from 280 deals to close the week at 316 deals. The FX commodity index saw an increase of 2.73% to close the week at 475.81 index points. We saw a marginal increase of 0.51% in the FX export index to close the week at about 240 index points. Across our volumes traded, we only saw an increase week on week in the volumes of maize, soybean, and cocoa traded. For our price, we saw an increase in the price of maize by 2.55% to close the week at 218.73 naira. We also saw an increase of 3.29%, with soybean gaining about 10 naira to close the week at 315 naira. Also, cashew saw a marginal increase of about 1.33%, gaining 6.16 naira to close the week at 468.79 naira. Cocoa also gained about 106 naira, gaining 5.9% to close the week at 1,899.99 naira. We, however, saw a decline of 2.45% in sorghum to close the week at 291.32 naira. Paddy rice also saw a decline of 3%, losing about 9 naira to close the week at 310.56%. Other commodities remained flat on the exchange. For more information about our commodities or about FX, you can visit our website at africaexchange.com. And to trade commodities, you can download ComX on Play Store or Apple Store.
All right, thank you so much, Motola Kongbe, market data and research analyst, AFX, for that update. All right, taking the conversation further now, in Nigeria, agricultural value chains involve a variety of actors and activities that contribute to bringing a basic agricultural product from production in the field to final consumption. Let's gauge the penetration rate of technology into rural areas and amongst the smallholder farmers. Let's talk to Yusuf Oguntola now, Chief Technology Officer, AFX. Join us right there from Abuja studio. Great to have you on the program.
Thank you for having me. It's nice being here again.
Great. So Nigeria and the world at large are, rapidly adapting to the digitalization of various sectors. What does the acceptance of, technology, mean for the sector here? And what kind of technology can we really get, at this time?
So I think everybody within this space already would allude to the fact that we've gone past the stage where we are talking about acceptance of technology in the agricultural space, right? Every major stakeholders within this ecosystem understand that to get from the point where we've been and then move on and become viable in the world, we definitely need technology to come into play. The only mistake I see a lot of people now making is that when we hear technology, we seem to immediately want to think it is hardware. You're talking drones, you're talking mechanized farming, you're talking machines and all of that. Some other people think when you say technology, it is software, right? You're building web applications, you're building mobile applications. However, technology is all-encompassing. It has to do with all of this. You have to think from how is the farmer getting input, what category of inputs, and how optimized is the kind of seedlings they're using, even on their farm. So when you have improved seedlings, as an example, you automatically improve the yield that they get at the end of the day. So you are talking of better farm practices, you're talking of better aggregation, which automatically reduce the post-harvest losses that farmers would see if they were using the normal domestic practices that has always been in place, right? This also goes into how are we transporting it to the warehouses, what is our storage technology like, what percentage, today we are able to store less than 10% of what we produce, right? Technology would help in doing all of this. We are also talking about getting all of these things to market. So it means we need to infuse technology into every bit and part of the value chain in the agricultural sector.
All right. If we're looking to actually bridge, this gap, how do the smallholder farmers, how do you see that they get these technologies? So
the smallholder farmers need to be placed at the middle of all of this conversation, right? They've always been left out of the conversation, which is why we've had a lot of summits, we've had a lot of sit together panels, and we've not seen as much effect in our food production. So one of the things that needs to be done greatly is farmer education. How are we educating our farmers? When you talk about food sustainability, right? Sustainability has actually 3 levels, right? You have the people, which is the farmers that are going to be planting the food we're talking about. You have the planet, how environmental sustainable is what you are producing. You have the profit end of it. The farmers needs to make money from what they are producing. Everybody within the value chain also wants to make money, right? That is why everybody is coming to agriculture. So how are we able to do this efficiently? Farmers need to produce. And if the farmers are not incentivized enough to be able to produce, then we are already lost out of the game, right? Now, we say that for you to be sustainable, you have to be mad about it. And mad means that you have to measure, you have to analyze, and you have to make decisions based on your analysis. So we need to incentivize the education of farmers enough. That's one. Then technology would also come into play here, right? We'll see the advent of AI and big data playing a major role in how agriculture can be moved and be done better, right? So if farmers are producing on their farm, a lot of data would be churned out from there. You have gigabytes or petabytes of data. You need AI to be able to actually analyze all of this data and be able to make meaningful sense, insights, and be able to make better decisions as to how do we do this better next year? What do we need to do in terms of the soil nutrients, in terms of the seedling you are planting, in terms of the ecosystem in which you are playing, and all of the other factors that would affect the farmer and their farmlands.
And obviously, when you hear, technology, there is a cost implication, and most of them are not, affordable. What are companies like you doing to make it affordable for the smallholder farmers?
Clearly, a lot of additional financing needs to go into agriculture, right? Technology doesn't come always cheap. There are some part of it that may be cheap, right? If you're doing softwares, that may be a bit cheaper than doing hardware. So we need to see a lot more people coming into this stage and doing a lot more interesting stuff. What we have done as an organization is to set up what we call an innovation lab, where we have experts that are going to be putting their hands on the table and then learning, doing research, and trying to understudy what's going on within the space, building technologies that would be able to solve some of the inherent problems we've seen in the agricultural sector, and also taking learning from the different parts of the world that has been doing this better than us. So this is FX doing its own bit of the issue, right? So we need a lot more people to also stand up and come into this space and do a lot of funding, set up a lot more labs to do a lot more researches and churn out a lot more interesting technological outputs to help the farmers and help us sustain food production in Africa.
Right, so much investments needed there. But before I let you go, do we have current platforms that, promote tech, in the agricultural space?
Absolutely. There are myriads of platforms where conversations are ongoing, right? As an organization, we set up what we call the Code Cash Crop, which is where it's an industry-led conversation where we bring agriculture, technology, and finance experts together to come and speak to what are the ways in which these three key sectors can come together and then attempt to solve and propose solutions to the problems that are in the space. There are also several other conversations happening around Africa. There is the Agras AGRF, which happens almost every year. There is the African Tech Summit and several other summits and panels happening here and there. These are some of the conversations that are going on. There are also the back office conversations that different people have, right? So but we need to keep all of this up to get better at what we do.
Right, and we'll keep following those conversations. Thank you so much, Yusuf Oguntola, Chief Technology Officer at AFEX. Thank you so much.
Having me.
Welcome back. Still watching Business Morning live from Channels HQ. Let's head on to the markets now. We have Anita to give us the details, and yeah, Anita, we did get that. We did get that bearish close.
Morning.
Yesterday, good morning.
Well, I think I still stand by my crystal ball because what you see on the market, which I will be showing you, is just profit taking on the markets. One of the most capitalized among the top 10 most capitalized. Yes, just profit taking. And mind you, it's just the same stock which made the market to gain 0.92% earlier was the same reason why the market made a pullback at the close of Tuesday's trading session. So it's not really something to worry about. But well, of course, I still expect that bullish sentiment.
All right.
But now, so let's give you a review of how Tuesday's trading at the NGX closed. There you see on your board there, almost 0.5% was knocked off from the all-share index of the Nigerian Stock Exchange. And then as well, in terms of in Naira value, is more than 134 billion Naira. So in contrast to what we had on Monday, we had more than 250 billion Naira gain. And then at the same time, we also had 0.92%, but so far it has reduced, and then year to date we're at about 0.4%. But let's take a look at the other part of the market. Sectoral performance, like I mentioned to Ladi earlier, that the market is still in the green, but what you saw here was just unchanged for the industrial goods counter of the market, as well as the oil and gas counter. But when you take a look at the banking sector, where you see there, it's just 0.07%, while for the consumer goods, we had 1.54% gain. So now that's for the activity part of the market. FBN was the most traded value stock by volume, and then Boa Cement was the most traded stock by value. Now, to give us more details into Tuesday's trading session and then what to expect, particularly if you want to make your stock pick, let's talk to Victoria Adegboyega, who's a stockbroker at Interstate Securities Limited. Thank you for joining us, Victoria.
Yes, thank you very much for having me.
Now, I will start first with the political economy. First, it's 45 days to the general elections. Of course, we had this expectation that the market will make a pullback, but when we saw on the board there, we saw 51,000. We were predicting it was going to go lower, below the 40,000 mark. Now, for Tuesday's trading session, we saw a slight pullback, but can you give us more details? And then, of course, how is the current investment environment affecting stockbrokers investing at the moment?
Okay, so thank you very much for the question. So let me actually start with the pullback of the market yesterday. As we actually said earlier, that the pullback was due to the fall in the price of Ethel. So yesterday, so like that ends up being the stock with the highest market cap in the market. So like a 4% drop in the price of Ethel yesterday actually affected, and it was very massive impact on the ASI, and that caused to drop by 0.49% that yesterday. So, and also let me speak on the political economy before going there. And because there was no also any counterbalance effect of all other big guys market, so that the drop in Ethel really had a very massive impact on the overall ASI. So Ethel was settled at 1,003, and it closed the market at 1,000 and 1,560 naira yesterday. So that the 70 naira difference, and that was 4.29% change. That actually dragged the market. So moving on to the political economy of, with the election, I know previously before now, there's usually tension election, but for some, okay, not strange reason, but because because the election is not between it's not really pronounced like between northern and southern Nigeria. So it's just because like the people that are contesting, Buhari is already in power, is the northerner. If at all, Atiku is also contesting, but since the northerner is already in power, there's no real, there's no real like move from northerners to actually want to get power by all force. And also, people that are contesting from south, southwest, south. So I can say generally that
Victoria,
an average southeastern person, southwestern person does not really care about politics in Nigeria. I'm sorry.
Victoria.
So that we won't really have any much. We don't really care about what happens with the state. But I think that's important.
Okay.
It's not consistent. So there's not a lot of tension in the political economy. So that's why we can actually see that it's not really affecting the market. So
Victoria, can you hear me?
Expect or fight or any further insecurity due to
Victoria, if you can hear me, I would like to move a little bit, step aside from the political economy. Now, at the moment, how is the market performing? It's just the trading day for midweek has just started. So how's the market sentiment, and what's driving the markets?
So currently, the market is negative. It's down, actually. It's down by 0.03%. We are quite marginal. But we can also see that the major forces driving the fall is also like profit takers. When people have actually made a lot of profit from October to the market was really down in October, November. But based on the activities of people positioning for any season, the prices have actually gone up. So people are also taking profit for that. So that's, we can see activities of profit takers affecting the market negatively there. But also another major thing that's affecting the market is I don't know, it's gone down by 10%. And that's I'm not getting any news that
Victoria.
Before the end of the market.
Okay, Victoria, so I think we'll just digest that and then, of course, have optimism for the market. If whichever side the pendulum swings, we'll move towards it. So that was Victoria Degboyega, stockbroker at Interstate Securities Limited, giving us analysis of the market and then, of course,
I guess,
what's happening.
Victoria had a lot to
yeah, she had quite a lot, but time is never our friend, never your friend, neither my friend.
Yeah, so maybe profit taking today or...
Yeah, well, although, I would have...
Maybe.
Yeah, actually, I had information for about two other markets, the bonds market as well as the unlisted securities market. But just a brief, for the bonds market, it was bearish, while for the treasury bills market, it was bullish. And of course, we will be having a primary market auction by the central bank today. Then for the unlisted securities market, it was a bearish, another day of bearish sentiments for that segment.
Another day. Thank you so much, Anete, with the details there with the markets. Let's move on to our UK studios now. We have Juliana standing by right there. Good morning, Juliana. So it's job cutting season, and the new one now, Goldman Sachs, set to cut about 3,200 jobs, and UK workers are going to be hit by this one.
Good morning, Laddie. That's absolutely right. Today is apparently the day when Goldman Sachs staff will find out their fate and just see whether or not they're part of that 3,000 headcount that are going to be losing their jobs, which is a shame. Nobody wants to hear that at the beginning of the year. However, this was forewarned. Goldman Sachs, which is the world's largest investment bank headquartered in Wall Street, I believe it has a market capital of about $120 billion. In November, they were predicting this global recession, which we're likely to enter anytime soon. And they said they need to scale back. So it's not just reducing about 9% of its headcount, because I believe they've got about 50,000 staff worldwide, including 6,000 here in the UK. Those who enjoy, flying across the world on private jets or receiving millions of dollars every year in bonuses will no longer be getting that. They are trying to make sure they close ship, keep things very tight. I believe this year alone, well, this fiscal year, they've already lost about 40% of their market capitalization, which is a huge amount. Next week, Tuesday, we're going to be receiving their full year financial details. And as you said, we are expecting some of those job cuts to affect staff in the UK. So Wednesday is the day. This was first reported by Bloomberg on Monday. So I'm sure by now, if you are working in Goldman Sachs, you would know whether or not you're going to be keeping your job.
Right. I guess it's a cost-cutting season. First, we had Amazon, we've had Meta. Wonder who's going to be next. But let's move on to other stories now. We see, even though there was a cost of living crisis in the UK, retail giant Sainsbury's was able to make a record winning in December.
Yeah, that's absolutely right. It kind of follows on from the data we received by Kantar, which is a retail assessment analysis tool. And they said that, 23rd of December was the busiest shopping day that they have seen on record. And this is despite the cost of living crisis. We have been regularly receiving trading updates from the big four grocers in the UK. And today was the day of Sainsbury's, which is second in size only to Tesco. I believe in the UK they've got about a 15.5% share of the entire market, and they've done exceptionally well. They've just reported to investors their 16 weeks of trading up until the 7th of January. And yes, Christmas was great. They said people were spending, trying to get some deals, shopping very early, making sure that they had enough food around the table, because of course last year we had, in 2021 we had Omicron. The year before we were full-blown in the pandemic. So this is great news. And according to bosses, they expect this momentum to continue onto the new year. If things are not going great, people will still eat if you can afford it, of course. And that's been reflected in Sainsbury's numbers this morning.
Right. I guess the consumers are still quite resilient at this point. All right. Thank you so much, Juliana. We'll see you at 1:30. Thank you.
See you then. Thanks.
All right, now let's see if other markets are looking good. Talking about the crypto market, there we see Bitcoin there looking quite strong. But even though it's still fear in the market, we see Bitcoin staying above the 17,000 level holding on strong, and we see some bullish momentum with some altcoins there. Yesterday had gains of about 40%, with the top gainers list. Let's look at the market cap this morning. Still $857 billion, still above that $800 level. It did get below this, and we've gained about 57 billion now. So it's up 0.86%. Volume traded in the total crypto space, Bitcoin and the altcoins, down about 14.45%. We see Bitcoin dominance still steady at 39.19%. Let's look at the price of Bitcoin this morning, $17,449. That's up 1.41%. It did start that upward correction from a 16,500 level. It's gained so much, up to this point. Some analysts are saying this might be the start of a new bull run, but who knows? Might be short-lived. Volume traded $16.35 billion. Let's look at the price of Ethereum, $1,300. Staying up, steady, up 0.83%. Volume traded $5.87 billion. If you look at the top alts for market cap, it's all green on that counter, with XRP, the biggest gainer there, 3.58% at 36 cents. So it's looking quite green, this market. Let's bring in Gilbert Jopatana, financial market analyst, to bring us up to speed. Hello, Gilbert.
Yes, good morning.
Good morning, Gilbert. So the altcoins are pumping, Bitcoin looking strong, above 17,000. Is this the bull run we've all been waiting for?
Okay. It's first of all great starting the week on a positive note after last week's macroeconomic data and seeing BTC already sitting near its 1 month high. But when I take a look at the BTC Ethereum's dominance chart, it actually tells me a story of alt dominance on the way. While Ethereum price itself is well positioned and structured for a price performance against Bitcoin to a degree of respect. However, this is not a bottom call or a bottom signal, but more of a relief rally, and we could potentially even pull back where we were or even lower. But whether or not this rally lasts depends more on FOMO. Buying always begets more buyers. However, those who were strategic enough to position themselves even a month ago, right now have an opportunity to take a profit while the market gives us this opportunity.
So what are you seeing coming as? We're expecting that U.S. CPI data. Is it going to be good or bad? And, what happens with Bitcoin and the altcoins?
Okay, the fact that the Fed have reiterated their stance that as long as inflation is up, they are still going to keep increasing rates. And that is why the last minute shows flexibility. They are willing to be flexible. If we see lower numbers of CPI, then I think we may have the same interest rate hike or just a bit lower. But as long as we still see inflation higher, I won't be surprised if I see the Fed still maintain the same interest rate hike or just a little bit higher. But if we have more of a dovish interest rate, I think it's going to be good for the market. But I think this is the year where we are going to see the dollar reach more of the peak of its bull market, and we are going to have the cryptocurrency market have more of its bottoming and positioning itself for more of a bigger move against next year.
What do you see pushing, the U.S. dollar? We do know, last year, the dollar hit a big high, 114 points to most other top currencies. Big high, but it's been pulling back, since then. What do you think is going to be the next catalyst to take the U.S. dollar higher in 2023?
Okay, first of all, money always moves from where it's treated less to where it's treated best. So we saw the dollar having this rally, which was a massive bull run because of the biggest interest rate hike we have seen in decades from the Fed. And that was why we saw that kind of big catalyst movement. But right now we have seen the Fed already trying to be moderate while increasing rates. That is why we are no longer seeing this kind of aggressive move that we have seen before. So we are looking for a catalyst. I think we should be looking if CPI, if they are not able to manage interest rates and we see higher numbers and the Fed's increased rates, it means that we are going to see such a massive rally from the dollar. And once that happens, we're also going to see institutional, what I like calling the Rockefeller institutional traders coming to the market massively to take advantage of the dollar price movement. But if we don't see this, you're going to see this institution move to other marketplaces that offers them major volatility to the upside.
Yeah, I'm talking about safe haven assets. We've seen gold actually perform well, since 2022, into 2023. And obviously, Bitcoin, supposed to be the digital gold. We'll keep watching if that one does anything. Thank you so much, Gilbert Ripata.
All right, thanks for having me.
Thank you. All right, now let's look at the top 5. Going to see Woo Network there, 16 cents, up 10.19%. See that the token there having some reorganization there with the tokenomics for this coin. I think investors like that. It's up 10.19%. Mina token is up 8.64%. And Holochain, it's not been on the top gainers list for a while, but it's moving well now, 3.67%, starting some kind of rally there. CRV, up 3.66%. We see XRP there getting on the top 5 gainers list, up 3.44% at 35 cents. We'll see if the XRP bulls can take that up higher. We see Gala there. That's 3 cents, down 11.41%. It did have quite a rally, over the weekend, but seeing profit taken at this point. Lido down 5.19%. Zilliqa, 2 cents, did have a run. I think sometime in 2022, got to about 20 cents, but it's down 5.08% with profit taken this morning. And Sand token there, 3.77% down. So that's how the market, the crypto market is looking today, not looking so bad. Well, that's the show today. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated. More updates and developments in the world of business. And as usual, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. Flip over to the videos. You can watch all our productions. Thank you for watching. I'm Vladi Williams. Bye for now.